economy. And I'm wondering if you could talk a little bit more about that relationship between tariffs and government revenue and that switch over to income tax, because that feels pretty important to understand what's going on right now.
Yeah, so the tariff system, it was suited for the 19th century. It raised enough revenue in most years to pay for the federal government. But it also had another problem associated with it. It attracted lobbyists and special interests who wanted favorable rates carved out for their own sector of the economy, their industry. It could be the iron or steel industry in some cases. Places it's textiles. And it's basically every time that they revise the tariff schedule, they change the tax rates, they descend on Washington like vultures and start lobbying their local representative to give them a favorable rate that either allows them to have a greater ease at accessing raw materials, or the more common one is to penalize their competitors abroad. So if I'm a Pennsylvania iron mill or a Pennsylvania steel mill by the end of the 19th century, I want a tariff put in place against British steel. They're my competitors abroad, because then I can charge higher prices at home. And what really happened, it all comes to a head in 1909. There's a tariff schedule revision. President Taft asks Congress in his annual message, he says, I'm tasking you with revising and modernizing tariff schedule. All the lobbyists descended on Washington, D.C., and it turned into a corrupt free-for-all. So much of a backlash against it that, in fact, members of Taft's own party, the Republicans who were in control at that time, started to defect and said, maybe we need a different revenue system. And that's where the income tax amendment is born.